Hey, what's up, fam? We are back on the CEO Pulse podcast where you get the real, the raw, and the mind of entrepreneurship. So right now we are sitting down with Mr. Nick Bradley. Check this out, 117 acquisitions in businesses, right? There's a lot of questions around the idea of setting up a business. Should I sell the business? Should I build the business? Should I buy a business? And what comes around in terms of those conversations? And right now we're going to be clarifying a lot of that stuff. So Nick, thank you so much, man, for being on the show. I appreciate it.
Hey, Rafael, it is great to be here. We can kick off, if you like, by me saying you shouldn't start a business. How's that sound?
Well, that's a great hook, as we say, right? I love it. Why? I mean,
I'm joking. I'm obviously joking a little bit. I mean, my view with startup, right, is, you have to have a rite of passage, right? So I started a business when I was 18. I sold it a few years later. So I did start a business once, but then I realized it's really hard work, right? It's really hard work. And what you can do instead is that you can buy a business off someone, right? That they've done all the hard work. They've got the initial customers, they've got cash flow, they've got products and services, they've got a brand, right? Whatever. You can buy a business and then you can grow it from decent foundations. You can sell that business for millions of dollars, and it's a lot easier, a lot less stressful, arguably a lot more fun than just trying to start from the beginning. So there you go. How's that for a kickoff?
I love it. I love it. So you're taking the value add approach, right? We see that in real estate. We see that in, commercial real estate, all those places, but you're taking somewhat of a similar framework and then applying it, into business. I do want to break into that. Before I get to it, though, I want to tell me a little bit about your personal background. How did you get started with how did you decide to become an expert in scaling businesses and then teeing up exit strategies? I'll get into it because I don't think it's a natural train of thought. Like, okay,
no, cool. I didn't wake up and decide I was going to do it. No, I mean, but I got there through an interesting path. So what I do now is effectively called acquisition entrepreneurship, right? So the definition of that is you are buying an existing business as opposed to starting one. Okay, I got into it because years ago, I mean, I grew up in Australia. I live now in the UK. I've been here for almost 20 years. And my career, as I said, started, I had a business. It was a fitness training business, right? Back in the late 80s, early 90s. Back then, not many people had personal trainers or any of that sort of stuff. So it's quite a new concept, right? And so the people that would invest in that or would pay for a personal trainer back then were doctors, lawyers, stockbrokers, people who had status and wealth, okay? And I did that business for a while. And then I decided, you know what, I'm going to go and do something else. I'm going to try and move into the world of corporate. Now, the reason I made that decision is, I don't know about you, but when you're growing up, you've got all these different influences in your life, right? And people are telling you you're either doing the right thing or the wrong thing or whatever else, right? And my grandfather at that point in time was a very big influence on me, an amazing man. And he was like, do you really want to be doing this kind of startup thing? Shouldn't you go get a job? Right. And that was in the back of my mind. That was probably said to me for like years. So when I had this fitness business, it was doing okay, but I thought, I don't know if I really want to do this entrepreneurship thing. I'm going to go and get a job, right? A real job, whatever you call that.
Yeah.
But anyway, that was quite an interesting blessing because I ended up working for News International, which is Rupert Murdoch's big media empire. And I managed to progress quite high in the ranks into senior management in Australia. And then that allowed me to travel to the UK, to London. And I was involved in strategy and I was involved in marketing and I was involved in business growth. So I was starting to get involved in things like acquisitions. How do you grow a business strategically versus trying to grow a business one customer at a time? So I was involved in all of that at quite an early stage. And we ended up selling that business in around 2008 for just over £2 billion. I was involved in that sale because I was in the senior management. And after that, I got introduced into the world of private equity, which I then spent a decade in. And that's where I did the bulk of the acquisitions and the exits that you mentioned beforehand. So the summary is a bit of entrepreneurship, traditional startup in the beginning, big corporate career, learning a lot of interesting stuff, got bored of that, got into private equity, which is all about fast growth, aggressive financial stuff, really interesting, but also challenging. And now I do that, but I do it more on my own terms.
So, I mean, well, that's incredible. You have a very, very balanced mix of the bootstrap, that comes in, and understanding that notion, right? I think most of at least most of the people that I come across on the business development side, or people who are starting up, they're like, okay, I have this idea, I have this passion, I have this North Star that I want to follow, right? And they end up, bootstrapping the business to get to one point, and it either goes a couple of different ways. People will capitalize, will grow that company, eventually exit out, or they just kind of fizzle off if they get tired, or they keep it at a bottlenecked level. But you hardly ever hear about a company actually, capitalize or selling off and capitalizing, somebody coming in and then just exploding that out of the water. Like, for example,
it's kind of hidden. You see, this is what's interesting, I think, for some of your listeners, is what you just described there does happen. It's just not talked about very much. It certainly isn't talked about in the world of startup. Right. So everyone thinks, and this is what I thought for years. Everyone thinks entrepreneurship is starting a business.
Yeah.
But it's not. That's only half the game. Right. There are different paths into entrepreneurship, and people have different skill sets and mindsets, which will allow them to be more successful in those different pathways. So private equity, I mean, what it is, for people who've never heard that before, right? It's basically firms or like investment bankers, right? And they pull funds together from private sources. So, if you've got high net worth, if you're worth, X number of millions, you might invest some money into a private equity firm, and they'll raise, and there's different sizes of private equity firms, but I'll talk about what we call mid-market. They'll raise a fund of, like, say, $400 to $500 million. Okay. Then the brief is to go and spend that $400 to $500 million on something like 10 businesses, okay? 10 to 15. The number isn't that important, but the idea is they're buying, let's say 10 businesses worth about $40 million each, okay? Now, they're looking to buy businesses that have got good foundations, like I said at the beginning of our conversation, but are under-leveraged. So, they've got a good, strong presence in one niche, but they might not have geographic expansion. They might have a great product, but poor marketing. They might have a good leader in there, like a good CEO, but the business is small. And if we could put more businesses together with that CEO, then we could create more value. The whole idea of private equity is what we call compounding, or buy and build. We want to buy an underleveraged asset, and then we want to buy other businesses and bolt them all together to create a group. And then we want to sell that group for a minimum 3 times whatever money we've put in. So if I've put, let's say, 100 million into creating that group, I want to sell it for 300 million within 3 to 5 years.
Within 3 to 5 years. Wow.
Usually. Sometimes it's a little bit longer, but there's a reason why there are more billionaires in the world created from private equity than almost every other industry combined.
Wow. I mean, that's really, it's a different gear, right? To what most are used to what I'm used to, right? I'll listen to, okay, big numbers in real estate deals and commercial deals, and, and that kind of stuff there. But you're talking about a value add move that's going to triple the value of something that's already worth 100 million in a matter of
and to make it practical, because I realize people listening to this might be thinking, well, they're big numbers, I can't even grapple the idea of that, right? So let me tell you what I do now, right? So similar to what you said at the beginning about real estate and sort of flipping houses, I flip businesses. Right. So I'll go and buy a business that's generating, let's say, between $1 and $10 million, okay, in revenue. And I'll buy that business for around 2 to 3 times the profit. So to make this easy for everyone, let's say there's a business out there doing $3 million in revenue. That's not too big a business. There's probably a lot of your listeners have got that or have aspiration to get there soon. Let's say that 3 million turnover is making around about $1 million. This would be a good margin, about $1 million of profit, right? So 33% profit margin. I'll go into a business like that, and I'll say to the founder, the owner, I'll say, I'm going to pay you for that business. I'm going to pay you $3 million for that business. Okay. Now you might say, well, why does the person want to sell that business to me for $3 million when, like, they're making $1 million a year?
$1 million a year, yeah.
Well, there's a really interesting dynamic here. I target owners who are reaching or at retirement age, where the value of time to someone who's 60 or 70 is greater than money. Mm. So if I turn up and say, I'm going to pay you $3 million for your business, you can now sit on a beach or whatever you want to do, play golf for the rest of your life. That's quite attractive to someone who's retiring. The other thing that people need to hear is there's 10,000 people per day retiring in North America alone. And there's 1,600 businesses, profitable businesses closing down per day because there aren't succession plans.
Wow. That's an amazing stat.
So this is why, I was joking at the very beginning, right? When I said, don't start a business, but think of it this way. If there's all these businesses closing down that are already generating, let's say, hundreds of thousands of dollars in profit, why would you start a business when you have to structure a deal, you have to be able to do a deal like that. But why would you go and start a business when you can go into something that's already got that level of value to it?
Right. Yeah. I mean, the trench work has been done, right?
Yeah. And then your job, where you were going beforehand, is how do you grow it? Yeah. And so for me, I'll buy a business around that size, right? I'll often use hardly any of my own money as well. I'll explain how to do that. And then I'll buy 2 or 3 businesses and put them together. And there's a threshold where that group of businesses, the amount of revenue and profit that it's making, makes it attractive to sell up to private equity. So if I buy a business that's, again, I don't want to get too detailed, but if I buy a business for 3 times profit and then I increase the profit, it's not uncommon to sell the business to private equity or another buyer for 6 times, 8 times, 10 times. I sold a business in 2017 for 14 times profit, to give you an idea.
14 times profit. And I mean, if you don't mind me asking, what percentage wise, it's fine. It's so you bought it, you came in, you bought the that particular business with OPM, other people's money, came in, did a value add move, whatever that was. It's
this specific example was a bigger private equity exit, and I'll explain some of the small ones. This was a bigger one, but the point that people have to understand is that 14 times multiple. That's a year of profit times 14. That's 14 years.
Wow.
So you're getting paid in one lump sum. That's why I talk about exiting rich. You get paid in one lump sum for 14 years of what would be working in the business to generate that profit.
Yeah. Right before we kicked it off, you were talking about life-changing exits.
Yeah. Yeah. Well, there were 3 where we met. Obviously, we met when I was talking on stage in Tampa, right? And I asked, when I was on that stage, I put 3 questions out to the audience, right? First question was, what is your life-changing number? And I made a joke. I said, it's not $1 billion, because what I'm really asking here is, if you had 10, 15, $20 million end up in your bank account tomorrow, would you have to work again? And if you not even have to be that smart, even if you just use or leverage that money well, you'll never have to work again. I can guarantee that's probably going to pay for everything you want right now. It's probably going to pay for, your generations to come for a period of time. And if you invest it well, you're probably going to turn it into 5 times that anyway.
Yeah. Yep.
So that was my first question. The second question, I said, why does that number matter? So, what do you want to do with it? And then the third question, which is probably the most important one, is what you're doing now in your business and your life going to get you to whatever that number is?
To a life-changing number.
Yeah, the number that gives you time freedom and financial freedom. That's what I'm getting at. Not your end game, not your, oh my God, I'm going to be a billionaire or whatever. It's the I never have to work again. I can now live life on my terms number. The first time you achieve that is what I'm talking about by life-changing.
You know what? It's an interesting perspective that I think a lot of times we'll start to do. And I'll speak for myself on this, right? I'll sit down and I'll think about, okay, what's my strategy for the upcoming year? What do I need to hit? And then I'll think about the number, which is my sustainability number. It's a number. Okay, if nothing changes, how much do I need to just cover my nut, right? Every single month. What are my expenses? And that number, just because of the lifestyle and whatnot, that keeps progressing. That number gets bigger and bigger, right? But it's one thing that I've done in the past is look at that number as a baseline, right? And an absolute minimum, and of course, build a little bit of cushion in there. And this is the absolute minimum, but really not. I haven't anchored my thinking to that life-changing number. Maybe that's something I should jump on like right away.
But both what you're explaining now, both are important, right? But most people will just focus on what you just explained, which is, I have a certain amount of money I have to make for a lifestyle that's going to escalate. I'm probably investing a little bit of money in savings or stocks or something, right? For you, it might be real estate, whatever it is. That's not what I'm talking about here. I'm talking about that big change, which gives you the monumental shift. So a lot of entrepreneurs and business owners need to do both, but they have to appreciate that if you're building a business, first and foremost, are you building a business to exit or not? Right. And some people don't even understand what that means. Right. So are you building a business that's going to be so valuable one day that you could sell it for life-changing money? Right. That's the first question. You may not even know the answer. Right. But you have to think about it. If the answer is yes, which I encourage it to be for most people, then work back from that, saying, okay, well, if I want to sell the business, what do I want to sell it for? What's the minimum that I accept? What's going to change my life? And then the strategy, the plan to get there is working back from a very clear outcome. Okay? The challenge is here, and I get people say this all the time, I'm challenging people to think bigger. Not, step a little bit outside their current identity if they're really wanting to do something like this. Most entrepreneurs are wanting to do something like this, but they just struggle sometimes to admit it to themselves.
I think it's scary. I think it can be scary, right? To have that big think. And right now, as soon as I said it, the sustainable number, I thought about that. Like, okay, what about the big picture? What about the big think? What about putting ourselves out there and then really aiming for those, bigger goals that can be tackled? I remember when I was just listening to your presentation, I was thinking, wow, okay, that's completely outside of the box where I'm used to playing. And I think it can be daunting. It can be done for somebody who's used to, a certain number, a certain, stability, right? In terms of risk and the pace of life and how things kind of roll out. To have that bigger think can really be challenging. Now,
and there's a way around it. Just to jump in on that, there's a way around it. Like, you don't have to do it all in 1 year, right? So I often say to people, why don't you create a 20-year vision? Right, I've got one, right, and that sounds a little bit like even that could be overwhelming, but you don't have to overthink this, right? You just sit there and say, okay, at whatever age you're going to be in 20 years, right? I'm going to be 67, right? I have a very well crafted descriptor in my journal of what my life to be like then. Where I want to live, people I want to hang out with, places that I want to have businesses I own or holiday homes or whatever, everything. And I don't sit there and every day read it, but it gives me that North Star of a direction.
Right.
And I broadly know how much money it's going to take to have that lifestyle. And that might be the starting point, because most people don't think like that. They just think, as you said, how much do I need to make this year? Can I incrementally increase it by 20%? Definitely do that. I'm not saying don't do that, but do that, but also have something out there that is a bit scary. But if you don't sow the seed in your mind first, thoughts become things. If you don't put the thought in your mind, you ain't going to get there.
Yeah, 100%. Absolutely. There's if you're just shooting them, you're going to hit everything, right? It doesn't necessarily, it's going to be something that's going to be lining up to what we want. It all comes down to that vision. And I think it really takes guts, right? To sit there and be honest with yourself and say, okay, cool. This is outside my reach right now, but it's, I'm going to put myself out there. I'm going to put everything I got into it and then build it. Create it or buy it, right? If you
buy it,
buy it,
yeah, just go and buy it. No.
Go out there and buy it with other people's money. So no, I think it's an absolute stellar strategy that's out there. And I had no idea about that, those stats. 1,600 businesses going out every single day just because there's no succession. That's mind-boggling to me, because I know how hard one has to work to build a business. I have this biased towards bootstrapping businesses and whatnot, but at the end of the day, it's the reality is it's a much slower pace to get to where you want to get to. Why? Because you're building everything.
It depends what you're trying to do, right? It depends. Like, there's nothing. Again, I was joking a bit. I don't want people to think, wow, startups are terrible.
No,
Like,
Nick said to buy. Just buy.
I just said buy. Well, that's because if you push me, if you say, I'm going to say that every time, because I see businesses not necessarily as this kind of life's mission thing. I know some people do. I see businesses as a wealth creation vehicle, right? So my business might be a big part of my life, but it's not my life, right? I'm not going to be, hopefully dying in 40, 50 years time or whatever it is, going, oh my God, my businesses, right? Yeah. I'm going to be thinking about my family. I'm going to be thinking about legacy, right? Impact. Did I make a difference? Did I help people? Right? That's life stuff.
Yeah.
So for me, the way I describe it is, if you can tick the time and the money box, like I've got all the time I need, I have all the money I need, then most people that I've had the privilege of being with or have helped to get to that level then go off and they make a bigger impact. They start to make a bigger, contribution to society and stuff like that.
Yeah, I think it's the progression that we have as human beings, right? We'll start up in this almost somewhat of a survival state, trying to make ends meet, and then just figuring shit out as we go, and then you evolve from that. You evolve from that into self development, and then you evolve from that into contribution and giving back. So I think priorities change as we grow as human beings. Now, one thing that's for sure happening when you come into the space where I like the fact that you look at businesses like we look at, or most of my audience looks at real estate deals.
Yeah.
In my head, it's a house, it's another transaction, it's a flip, it's a whatever. In your head, it's a business. So the framework it's still essentially the same. The product or the commodities is different, which I think
that's right. Yeah. And to think of it like this. So let me just sort of unpack this a little bit for the listeners. The one fundamental difference with flipping a business or what I would say scaling a business to an exit, right, is that you will make more money doing it with a business than you will in real estate generally, right? And the reason for that is the valuation of a piece of real estate or a house or whatever usually has certain fixes around it. Now, obviously the value of anything is always in the eye of the beholder. But if I want to go and buy a house in a nice street in Phoenix somewhere, the prices that have sold previously, current market trends, they're going to dictate the price. There's a ceiling on what the value is going to be, right?
Right.
So you can do the house up a lot and obviously make a bit of money, but it's not the same as what will happen in a business. So just to sort of describe what I said before, if I buy a business that's undervalued because it's a smaller business and it hasn't got all the things in place, and I pay 3 times the profit for that, it's not crazy for me to sell that for, as I said, 8, 9, 10, 12 times, right? Which if you just think about the amount of money I'm making from that, it's so much different.
Yeah.
It's a big compound. And, just to sort of explain the other people's money thing that we've referenced. In the same way that if you buy a house, if you go and buy a house, most people, when they buy a house for the first time, get a mortgage. Okay. Right. Most people have not got the means to go out there and pay for a house in one lump sum, right? That's how it works. You have to have a deposit usually, right? That could be 10%, 20%, whatever the figure is. And the rest of it, you pay back to the bank, to the mortgage provider over time. Okay. Now you get to live in the house, right? You get to enjoy the house, kids grow up there, whatever it is. And 30 years later, you make your final payment and you actually own the house, really own the house at that 30-year mark or something like that, right? You with me?
Right. Yeah. That's all.
Okay. Now businesses, right? So this is how I do it. So I'll find a business. Let's go back to my example. A business doing 3 million in turnover, 1 million in profit. I'm going to pay 3 times profit. So the asking price is, or the agreed price with the seller is $3 million, right? We're clear on that. Okay. Then what I'll do is I'll look at the business. I'll look at a couple of the financial instruments. The most important one is what we call the balance sheet, which dictates the assets of the business and the liabilities. And I'll go and get what is called an asset finance loan against the business assets. So sometimes that's things like real estate, but it's quite often inventory, plant and equipment, receivables, right? You can basically take a loan against all of the different things that are on the asset register on the balance sheet of a business. Okay, still with me?
Mm-hmm.
Now, let's say, for example, I do that and I can find off the balance sheet $1.5 million. Okay, the business is worth 3. We've agreed 3. I'm going to take that 1.5 that I've leveraged from the assets, and I'm going to pay that to the owner on what we call the close. So even though I'm going to pay you 3 million, I'm going to give you, on the day that I buy the business, the day that we close the agreement, I'm going to give you 1.5 million. Okay. Now you're probably thinking, well, hold on, but where's the other 1.5 coming from? Right. Well, what I'll do then is I'll agree with the seller that I'm going to pay the remaining 1.5 million off over 3 or 4 years from the profits of the business that I'm buying from them.
That's called carry on the second. Yeah.
That's called seller financing or deferred payments. Now, again, you're thinking, well, hold on. Why would I sell my business to someone like that? Why would I just take 1.5 million upfront cash payment and then get the other 1.5 million over 3 years? Why would I do that? When I went back to what I said beforehand, I'm looking to buy businesses off people retiring. I'm looking to buy businesses off people who are going to close them down, where time is more valuable than money. So if I went to you and you're 70 years of age, Rafael, and said, okay, you're going to close your business because there's no one else is going to buy it. I'm going to give you 1.5 million cash now. I'm going to pay you whatever it ends up being, 20, 30 grand a month for the next 3 or 4 years. And you can go and spend time with your grandkids or be on a beach or play golf. What option are you going to choose?
Yeah. Yeah. 100%.
And that's what I've just described then quite quickly is other people's money. Mm-hmm. I used asset finance. So I used a loan from somewhere else to make the closing payment. Then I used the money from the business to pay the remaining. Mm-hmm. And in that example, I haven't put any of my own cash into the deal. Now, in most deals I do, I put about 10% of my own money in. So it's not a fully no money down deal, but I'm just explaining that's how it generally can work. Yeah.
It's the framework is very similar to the way that you structure a traditional real estate deal. Your thinking it's just, different because it's a business. It's not an actual property. Now, how do you go about figuring out whether or not, it can be a value add thing and it's within your scope? Meaning, okay, cool. I see this business. It's got potential. How do you define your buy box? I guess that's what I'm trying to ask.
Yeah. So there is a full process to this, which I kind of prescribe to and teach, because the first thing you've got to do is what we call deal specification. So you have to define what's a perfect deal for you. Mm-hmm. So before you go out there, so you might go out there and start looking at lots of businesses. One of the sites that I tell people to go shopping on is called Biz Buy Sell. Mm-hmm. And if you go on there, you can actually search for businesses in any state in America, and you can even search to see if they offer seller financing. You know what I just described?
Yeah,
so
sounds like an MLS, like a business MLS.
It's amazing, right? But the first thing I do is go, okay, so what do you want ultimately? So do you want to work in the business, or do you want to buy the business as an investment? So if that's the case, you want to have a management team in the business. Do you want the business to be in your home state, or do you want it to be somewhere where you like to go on holiday? Most people, I say, when you're buying your first business, have it close. So, buy something in Phoenix for you.
Right.
Choose an area that you have understanding in, right? So a lane that So even though I've worked in private equity, I've also worked in media, education, professional services businesses. So a lot of the businesses I like to go out there and buy are professional services. So they could be accountancy, lawyer firms. I'm also looking at other sort of services businesses like security firms, landscaping, car washes, that sort of stuff, right? Because they're quite easy business models. I'm not trying to manufacture anything. I'm just selling a service, right? It's much, much simpler as a model, okay?
Right.
And then I just go out there looking, right? And I try and build up quite a big pipeline. So I'm not looking at 1 or 2 deals like you might in real estate. I'm looking at 20 or 30 deals. And the reason I'm doing that is because, to get someone to agree to the structuring, like I explained before, there has to be a certain degree of distress or motivation within the seller for them to want to do that. So they kind of want to be out of their business, right? Someone who loves their business is not going to sell it to you for the price that I want to pay. They're going to want more money for it, right? It's obvious. It's like,
Yeah,
it's the whole thing.
absolutely. It's going to be the typical conversation. Well, if the price is right.
Yeah. So you start off with that deal specification, then you go out there and what I call do deal sourcing. Now in America, you've got this amazing opportunity to use SBA loans,
right?
Where again, you might have to put 10% of your own cash into a deal, but you can raise that money also from investors in the same way you would in real estate. So you might have someone give you some money for the closing payment, you manage the transaction, you manage the business afterwards, and then you give them some equity.
Right.
So there's lots of ways of doing these deals where you don't have to have a heap of your own money up front.
Wow. Again, it comes down to thinking outside the box, right? Now, what does it do in your experience? What does it do? I mean, you're talking about a deal that's going to yield multiple $1 million, once we hit. And I want to go back to the idea of life-changing exits.
Yep.
Because I think it almost sounds far-fetched, right? But what happens, I guess, at a psychological level when you have the ability to put something together like that, and then get hit with a 10 mil, 15 mil, 20 mil, payday?
So, I mean, I've experienced that myself, but I'll talk about one of my clients who recently, as in literally September, so a couple of months from when we were recording this, he ended up with $10 million. So that figure we talked about. Yeah, and a bit of an interesting one because he'd had the business a long time. He had his business something like 14 years, and was always looking for an exit, but hadn't built the value in the business to get that. And then just before he sold the business, he suffered a stroke. No kidding, right? And so he almost got to the final hurdle and didn't make it, but he did, and he sold the business. The reason you have to set this up in your own mind first, right? And all the stuff that you and I would talk around in terms of belief and mindset is you've got to believe that this is possible. And when people sort of say to me, well, how is it possible? What I often say is, well, people are doing this every day. Right? People are doing this every day. I mean, if you go down to your local cafe or whatever and talk to people, there'll be people in that cafe who have sold their business for millions. It's not like it's uncommon, right? Yeah. And the other thing is, like, we're all human, right? So if I can do it, you can do it, right? But it starts with working out, as I said, working backwards from what that would be. So just to let me just unpack this again. I think it's useful for people. Let's say you've got a business right now. Let's say your business is doing $1 million, okay? $1 million in revenue. So just broken 7 figures, okay? And you're making, let's say, $300,000 or $400,000 in profit. Okay, so good, like little lifestyle business. Like, you probably got a decent car, paying your house off, going on great holidays, it's fine. What most people will do is they'll try and grow that business organically, one customer at a time. Every year they'll get a bit more profit, blah, blah, blah. But that type of strategy is at risk of market changes, pandemics, things that can go wrong quickly. And my view is that with digital transformation around the world, there's a lot of disruption going on. So holding on to a business and growing it organically is risky. Okay.
Yeah, because of the time factor, right?
Yeah, because time seems to be the amount of change in the world seems to be compressing, and the amount of change is bigger.
Yeah,
that's my view, right? Again, if you look at like just sort of political stuff, economic. I'm in the UK. Brexit's happened. Like there's all these kind of crazy things going on, and so if you've got a business model that's worked well for say 2, 3, 4, 5 years, don't think it's going to be the same in 5 years' time. It could be disrupted. So you're better off building a business to sell, taking your cash, as opposed to growing something slowly that could end up going bust. Right? And this is the thing. So if I had that business, it's doing $1 million, right? I'm making 300K. Instead of just trying to grow it organically, I would be thinking, are there any businesses that I can buy that are either like competitors or in my supply chain or whatever it is? And how can I create a little group? So instead of making $1 million a year, how can I get that to $3 million a year? And then all of a sudden I'm at $1 million profit as opposed to 300 grand or something like that.
Yeah. And
then you just keep doing that strategy until you get to a certain level where the people with the big, wallets, the big checks, they start to show interest. And that number just to be clear, is when you get to somewhere between 3 and 5 million in profit. So that's when private equity, my old world, would start going, oh, that's looking interesting now. So if you've got a business that's doing 5 million in profit, then you're probably pretty gonna sell that. Like I'd be surprised if you didn't sell that, because it's got past the threshold of being too small.
Over 3 million profits, and you're so an exit strategy for something like that. And I like the compilation. Basically, what you're doing, you're collecting different legs, right? You're adding different, more legs to the table here, so it's got more legs to stand on, and create more sources of revenue. So you're putting a I'm trying to think of the word it's
diversification.
Yeah.
You're diversifying your revenue, you're diversifying your business model, but really what you're doing is you're creating, back to what we spoke about, scale. And the truth of it is this, scale matters now.
Right.
Being small is no longer safe. And that's something that I think people don't really appreciate. I know you have to start somewhere, and you might be small to begin with, but I wouldn't be trying to grow slowly these days. Doesn't work.
Being small is no longer safe. Man, that's scary.
That's my view, right? And people can challenge it and say I'm an idiot, but you just have to sometimes, I often say you've got to jump up to 30,000 feet and just look at the world. Just look at what's going on, right? You look at how there's massive wealth transitions to some of the biggest, the wealthiest people in the world, the big entrepreneurs, the Musks. Look what they're doing, the Bezoses. Have a look at political instability. Look at the polarization of choices. Everything's becoming a little bit more insular. I mean, look at, not that I'm political, but look at the way the world has responded to COVID and the differences, like in your state and in Florida versus New York, for example, or, where it's like, it's crazy, right? But just think of all the businesses,
completely
all
different
the businesses
little countries, almost in the way that each one is operating. No, and I think you're right. I think it's you don't know when things are going to shift, right? COVID hit, and everything was turned upside down in a matter of a weekend. Everything after that was a ripple effect of what happened over that 1 week back in March. It's crazy.
I was in San Francisco at the time. It was so funny. I just arrived. I was actually on the plane when President Trump said that the UK was now banned from coming in.
Yeah,
and I had to. That was the weekend that they locked down San Francisco, and I was there with a friend, and like the whole city was like just a ghost town within about 24 hours.
Yeah,
Mental.
It's crazy. I mean, it's crazy, and you just don't know. I'm not trying to create or be paranoid here or anything, but I think you're right in the sense of having different strategies. You got to have a backup plan, a contingency, for lack of a better term, if something does hit, right. And I like the fact that you're putting together or you're creating value add opportunities through the compilation of different companies and then coming at it from that creative standpoint. So I think it makes.
I mean, the key word here, Rafael, is agility, right? All I'm not doing anything that no one else can do. I'm just looking at how the world is operating, and I'm looking at the data.
Yeah.
And I'm looking at the opportunity from the data. So back to my point, 10,000 baby boomers retiring every single day in North America. And guess when that phenomenon stops, right? Guess how long that's going to continue for?
Beats me.
I'll tell you, to 2030. All right. So there's another 8 years, right? But basically by the year 2030, all baby boomers will be 65 years of age. Right. So that idea of how many of them are business owners, right? So I didn't create that statistic. That's just what's going on. So again, if you're a person thinking, I want to be more entrepreneurial, I want to build wealth, there's a wealth transfer there that's just happening because people are getting older.
Yeah.
And that's what I'm talking about. It's not rocket science. It's just looking at the dynamics and being a little bit more externally focused and just seeing what's there.
Yeah, I mean, it's incredible. Just to kind of recap on what you're going through right now, it's so we have 1,600 businesses going out of service every single day, because there's no succession plan. And I think you're making a very, very important point in the baby boomer generation, and then having that opportunity to be around for the next 8 years. So there's space to capitalize here. Actually, one thing that gets me, and I think you're tapping into it in a very spectacular way, it's a lot of, when we think business, and this is most of the population in my experience, we'll think competitors. We'll think, okay, cool, I'm in the business of doing this, and this person is my competitor. I'm in the business of doing this, and this is my supplier. But I think the perspective of bringing those resources together, it's not, it's an exception, not the norm in the space of business, and doing it the way that you're doing it, bringing in for example ancillary companies to add value to this one particular group and elevating that value makes perfect sense, especially when there's 1,600 of them going out the window on a regular.
Yeah, and they're good, profitable businesses. I mean, they're not sexy businesses. Like, we look at all of them. Like, there's window fitting businesses in South Florida, and there's, I said, landscaping businesses are quite popular right now. Heating, ventilation, air conditioning companies, really good. They're kind of, when you think about it, they're providing a service that people need, right? And doesn't really go out of style, even though things get disrupted, as I said, all the time. They fly under the radar, but they make a lot of money. And a lot of people who have got good levels of wealth, like, again, that age group I mentioned, they've had these businesses doing well for years and years. They've got predictable profit. And so, if you can get them for a good deal, a good value, and then you can grow them. I mean, you don't even need to do what I'm doing. You don't need to go and bolt them all together and sell them for millions if you don't want to. You're still going to be better off with just growing a business that's already making, say, $500,000 in profit. Like, that can be your income, right? That is still an option, for people who want to do that path.
I used to own, one of my first businesses was a medical transportation business, and I sold that back in 2015, I think it was. But my advantage in the industry, in the area, was the technology. I was able to just leverage technology and then capitalize on that to add value to the business.
Perfect. Automation, marketing. I mean, a lot of the businesses we look at, again, remember, if someone's 65, 70, 75, 80 years of age, the idea of direct response marketing, some of the stuff that's more progressive these days, really good copywriting, all that sort of stuff, they've got no idea. Half the businesses we look at haven't even got websites or websites that work.
Yeah.
And you kind of think, well, hold on, what if I just did some basic marketing here?
Yeah.
Right. And that's the sort of thing I try and impress on people to look at, is you don't have to do a lot with these businesses to start to scale them and start to improve the financial performance. Yeah,
a lot of times the fundamentals are already working, and they're, like you said, they're profitable companies. It's just the scaling part, the being louder about the brand part it's one of the things that that's missing. I love it, man. It's incredible insights. So if and before, and I want to be respectful of your time, before we start signing off, if somebody wants to find out more about perhaps maybe working with you, finding out about your consulting sessions, where's the best place to find you, Nick?
Yeah, so probably the best place is to join our community on Facebook. So I'll give you a couple of things. So that's called Build Your Business Empire. And it used to be called Scale Up Your Business, but we just created the new group because we're talking more about acquisitions and exits and things like that. So that's the first place. The other place, people can listen to me. I've got my own podcast, which is called Scale Up with Nick Bradley. And there's a whole heap of different things going on there. But if people want to learn more about what we call acquisition entrepreneurship, I've got a book that I wrote on it, which is, again, it kind of covers a little bit of the stuff. It's a small book, but it basically talks about the stuff we've spoken about tonight, about how do you leverage other people's money to buy businesses. If people want a copy of that, they can reach out to me on LinkedIn. So just find my profile on LinkedIn, say that I heard, me on your show, Rafael, and then I'll make sure the team get them a copy.
Beautiful. That's awesome. And are you asked Nick Bradley in LinkedIn?
I think so. I think I'm Nick Bradley's Scale Up something or other. Okay. I'm also on Instagram. You can get me there as well, which is at Nick C Bradley. So I've got my middle name in there, at Nick C Bradley. So there's a few different places that people can kind of reach out and find me.
Cool. Nick C. Bradley. We'll be sure to put all those on the show notes. I want a copy of that book, so I'll be sending out a message myself.
Oh, okay, good. Yeah, my team can send it to you. As I said, it's only about 20 pages, but it just summarizes a lot of the stuff that we spoke about. And my big thing is if I can help people think a bit bigger, even if they don't want to go there, at least they've made that decision. That's cool. There's no judgment. You don't have to do it, but I wouldn't be doing my job if I wasn't making people aware of those different opportunities.
Yeah, that's the thing, right? And then once something like that happens, and it doesn't have to be a blockbuster, or a monster of a deal. Once you've done it, you get proof of concept. I think it's one of the biggest things that happens whenever you have a new experience, right? Whenever you're tapping into a new strategy, you get proof of concept, and then that belief starts to organically get bigger and more. You get more confidence, and your thinking gets bigger. The possibilities become more real, and it's just one of those progressions. I think you like you said earlier, you don't wake up okay, I'm gonna do this today and then just
no but for me it's just as I said, it's looking out in the world and just, I mean, a lot of people are just looking too insular. They're just looking at what's in, like, a couple of feet in front of them.
Yep.
And
I've been there.
Yeah, we all do. I mean, I've been there too. I think that more expansive thinking is kind of what I mean by thinking bigger and just starting to look outside. A lot of my clients who I work with, coaching and whatever else, the ones who had the best performance through this whole pandemic were the ones that were operating at that sort of 30,000 feet. They didn't need to pivot because they'd already been thinking about risk and opportunity before the pandemic hit. They'd already done the things. Right. And then the great thing about that is they could then leverage all the stuff that everyone else was scared about. Right? That sort of stuff.
Yeah. I mean, they've been thinking about it for a lot longer than a weekend.
That's right.
And it's action versus reaction. Right. What about your coaching program? Where do you have information on that?
Yeah. Again, people can reach out. We have 3 separate things we do. So we have the Empire Creation Accelerator is our acquisitions program. So that's where we actually teach people how to buy businesses using other people's money. So that's one thing. So if people are interested in that, they can kind of get in touch with me about that. The same way, you can join the community and ask some questions or get in touch with me directly, and my team will get that sorted. Okay. We also have our own mastermind, which is called Exit for Millions. And that is for people who have the intention to sell their business at some point in the future, and they want to learn how to build back from that outcome. And then the one-to-one stuff we have is called the MVP, the Maximize Value Partnership. And that's where I specifically work with 7-figure businesses that want to create an 8 or 9-figure exit.
Love it. I love it. Thank you so much, man. Hey, before we sign off, there's a question I love to ask every single one of my guests, and
sure.
That's if you were walking down the street and you ran into your 17-year-old self, what would you tell that young Nick?
Oh God, that was just before I started my first business too. Okay, so I'll tell you what I'd say, and then I'll explain it. Right. So this is 30 years ago, man. I'd say to trust myself. Right. And let me explain quickly. I know we're going to wrap it up, but I went to a Tony Robbins gig about 5 years ago, Unleash the Power Within, and when I was kind of moving out of private equity into doing what I do now. Right. And if you've ever been to a Tony Robbins event, they're like really full on, right? And he does this kind of, it's great fun, right? What's going on?
BPW especially is very intense.
Yeah. And he does this kind of Dickens, it's called a Dickens exercise. I won't explain it too much here. People just have to go and experience it. And he basically tries to sort of get you to think about what would life be like if you didn't make certain choices, if you didn't lean into fear, right? And through that experience, I remember just having this weird thought in my head, which was trust yourself, trust yourself, trust yourself. And I think some of the decisions that I've made over the last 30 years, I maybe overthought them, and I probably should have just accepted them a bit more and just kind of gone with the flow a bit more and just trusted the fact that I still had to do the work. It's not about not doing the work, but things will work out as best as they'll work out. You know what I mean?
Yeah.
And I think if I could give that message to myself, I probably would have enjoyed some of the pitfalls and the roller coasters and all of that we all go through. But then again, if I look back, it's still been a fantastic career and a fantastic journey. So, I'm grateful for that.
Salt and pepper of life, man, right there. I love it. Nick, thank you so much, brother. It's been amazing having you. Thanks for the perspective. And I think you have a very, very interesting take on the bigger thing, right? And then it's a change of pace really for me and my audience, I think, because we're so used to listening to this particular way of investments. This, almost a progressive way of getting into a space and then getting value out of that. But what you're talking about is exponential. It's a lot bigger. It can be a little bit daunting, can be a little bit scary. Yet, if you have the right pathway to it, it's totally doable. So I encourage everybody out there just to go reach out to Nick and then find out more about how his programs work, because this is valuable information. Thank you so much, man. It's been a blast having you.
No, it's been awesome, Rafael. I enjoyed the conversation, man. Great questions, and a delight to be here. Thank you.
Thank you. Much appreciated, brother. Much appreciated. And there you guys have it. It's a wrap. Boom.